Hello and welcome to this edition of the Market Share. I'm Paul Gifford, Chief Investment Officer at First Source Bank. Joining me today is one of our Senior Portfolio Managers, Matt Noll. Matt, a lot of conversation since the election, particularly around tariffs and inflation. So can you share a little bit about tariffs and what we're seeing in inflation?
Yeah, so to start with inflation, when we look at CPI, so kind of the broad measure, whether or not we exclude food and gas and energy prices or we include it, inflation's running right around 3%. So we've got a chart we can show here that shows longer term. Inflation has been coming down. It's somewhat under control now, but still you're at 3%. This seems a little bit high to most consumers, I think. But over the past 70 years or so, inflation's averaged around 3.4%. So we're right in line with the average. With how that's going to impact how that's going to be impacted with tariffs, when we start to look at what the U.S. imports on a goods basis that consumers would buy, roughly 3.2 trillion in goods are imported. It equates to about 11% of GDP. So if we see tariffs across the board of 10%, inflation's going to go up by about 1% just on that number.
So yeah, obviously if we go from 3 to 4, the Federal Reserve is going to have a bit of a challenge trying to bring that back down. So something clearly that we will be watching as we make decisions for our clients. Another part of inflation that's kind of been persnickety for clients and the Federal Reserve has been housing prices. You want to talk a little bit about housing?
Sure. The housing part is pretty interesting. Kind of go off topic for a little bit here, so bear with me. It will bring in COVID. But when we look over the past 50 years, the size of homes has increased about 50%. So homes are now 50% bigger. A lot of that stems from what we saw back in COVID. You know, people are staying at home longer. We can pull up a chart here that shows the amount of time people spend at home on average per day. Since COVID and past COVID, adults typically spend about an hour and a half more time at home each day. Before COVID, 61% of restaurant sales were carryout. After COVID, 75% of restaurant sales are carryout. So it really leads to just more people spending more time at home. The homes are bigger, the prices are going to go up there.
Fascinating article. We hadn't really talked too much about home size and actually an hour and a half extra a day being at home. Those are really big changes we've seen over the last 5 years. Clearly, inflation has an impact on assets and which ones do well and how you might be able to keep up with inflation. So when we think about asset allocation, Matt, what are some of the things we can share with our colleagues?
Sure. So typically, we're going to use bonds and stocks. In asset allocation, stocks are going to give you the growth, bonds are going to give you kind of the safety and liquidity. Over the last decade, the last full decade, bonds have returned essentially zero when interest rates were very, very low. So there wasn't a lot of kind of focus placed on bonds. Now we're seeing bond interest rates at 5%, which over the long term, we've got a chart here that shows, you know, interest rates on bonds on average is just over 5%. So we're right in line with the average. Now we can start buying bonds, you can get the return, you still have the liquidity and diversification. And then on the side that covers inflation, we can still buy high quality stocks. You know, US companies are going to innovate, they're going to grow earnings, and you're going to get the growth there that'll keep up with inflation.
Yeah, well, it's nice to always have that stock piece, but for that fixed income piece to finally add value and earn more than inflation, it seems like 15 or 16 years since we've had that. So that's really good for our clients as we look ahead over the next several years for the returns. Matt, really appreciate your comments today. If you enjoyed today's video, I encourage you to share that with friends, family, or colleagues. If you do not currently receive the market share, you can subscribe using the QR code at the end of the video. And as always, thank you for the opportunity to serve you and your family, and have a great day.